Hey guys, welcome back. Today let me calm your nerves down on the stock market correction. I've added another 2 Tesla shares yesterday. My conviction of Tesla is still sky high. Let me explain why I still buy Tesla shares despite market correction. 6 days ago, I posted a video about an upcoming market correction. If you want to find out more about this, I'll link it up here and down below. Today, the objective of my video is to calm you guys down. I'll share with you my views of the market and dissect things that are a little hard to understand into simple little bite size. In turn, you can help me out by liking this video. Thank you. Let me first explain what is tapering, and we shall start from first principles to really understand what is tapering. Tapering can only happen when some kind of economic stimulus program have been introduced. Economic stimulus program like the central bank buying assets that nobody wants to buy. This gives the market a cushion to support and not let prices free fall. So quantitative easing is the major part of the program to stimulate the economy. But what is quantitative easing? QE is when Fed buy long-term securities and then they increase money supply at the same time lowering long-term interest rates. So buying long-term securities give the market confidence and safety net. Increase money supply to provide liquidity and cash to move around the economy, increasing money velocity. They lower interest rates to incentivize business and individuals to borrow because the cost of borrowing goes down. This introduces more credit to the system, and since credit is a form of money supply increase further. The goal is to give the market confidence and make it easier for banks to lend and people to borrow. When March 2020 came, we were on unlimited QE. The Fed was telling us that they are going to protect the economy no matter what. So this gave investors confidence to stay invested since there are liquidity for everybody. Fast forward to now December 2021, there's too much money in the system. Everybody is spending their money quicker than before, also known as increased money velocity. People are paid to stay at home. There are not enough people who wants to work on the lower end labor. This causes price of raw materials at the very start of the supply chain to increase. So for example, price of cotton per kg increase, and this will lead to cost of manufacturing a cotton t-shirt to increase. And this will further lead to cost of operating a business like Cotton On or Uniqlo to increase. And then these businesses will pass down the cost to consumer, and hence price of a cotton t-shirt will increase. So if price of goods increase, it will have domino effect and everybody will start raising price together eventually. The market equilibrium will move to a new price level, and this is what causes inflation. So the way to stop inflation is to taper. So tapering is to slow down the purchase of assets. So the Fed is reducing billions of dollars of assets purchased every month because they already have enough money in the system and there is high inflation reported in US, 6.2% to be exact. If there is already high inflation, there is no need to pump extra liquidity onto the market. Hence they are speeding up tapering, cutting assets purchase, and maybe bring it forward to March and April of 2022. We will be moving from a Fed-protected certainty market to a uncertain market. And this drives a lot of panic in the market. So the actual reason of why I added 2 Tesla shares yesterday is because of the fear index. The market overreacted and we are in extreme fear, and it is the best time to dollar cost average. Now let me explain why I still have the balls to stay invested even though the near future of 2022 is quite bleak. Let me attempt to connect the dots for you. There are 2 ways that the Fed will use to stop inflation. Number 1, tapering. Number 2, to raise interest rates. Fed will speed up tapering, but my smart calculated guess is that the Fed will not increase interest rates that much. And that is because of their national debt. Their national debt is $29 trillion. If Fed were to raise interest rates just by 1%, it is $290 billion just in interest payable. So let's imagine they raise the interest rates back to 4%. A 4% interest rate will be $1.16 trillion in interest that US will have to pay. So let's do some smart calculated guess. US just barely recovered from COVID pandemic. Will they risk a recession by increasing interest rates? Their main adversary, China, is becoming a stronger threat each day. So US needs to stay in the low interest environment to have the economy performing to compete with China. So to summarize all this, there will be reduced money supply and a slight increase in interest rates. A low interest rate environment will be good for growth stocks, but things will probably sideways for a while. My outlook for 2022 is that things are probably going to go sideways or even a 10 to 30% lower than 2021. It is a good time to accumulate and dollar cost average on your highest conviction stock. The price is not going to follow the value of the company. Your conviction on the company will matter a lot. And since my investment horizon is long term for Tesla, if market were to be sideways and volatile for me, it is good for me to sell put option and use the profit to load out more Tesla shares. I've done a video on this, I'll link it up here and down below. What I'm more afraid of, however, is the larger US and China trade war. The COVID pandemic has forced these 2 nations to focus on their own domestic issues. To me, another conflict may arise when the domestic issues are settled. So you heard it here first. The bilateral relationship between the 2 superpowers will be the most important relationship of this century. It will either send markets to fear or greed depending on their relationship between each other. In conclusion, let's control what we can control: our emotions, our convictions, and control the long term. It is okay to take some profits off the table if market goes overpriced, build up a little cash reserves for better opportunities. I hope I'm able to connect the dots for you, make sense of everything for you. If you learned something today, help me out by subscribing to my channel. I'm trying to reach 1,000 subs. Like this video if you haven't. I'll see you tomorrow.